Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for joining me on this edition of Macro Mondays, which is being recorded on the late Sunday evening of September 14th, 2025. And in this edition of Macro Mondays, I'm going to talk about something very important. I don't know if it's directly related to macro, maybe it's not, but we're talking about how to take profits in gold and silver stocks. And I got my Ace Rothstein, or one of his suits, I should say, here for you. That's a movie reference, by the way. Look it up, which I think is pretty apt for this video. So very important, how to take profits in gold and silver stocks. And my philosophy for this secular bull market in gold and silver, or any bull market, is you buy, hold, and trim. What does trim mean? Well, you're taking profits. You're selling bits and pieces, fractions of your positions. You're not selling the whole thing. You're selling half, a third, a fourth, whatever. So we're looking at when you should trim, how you should trim. And I think this is very important because we are at a point where the question is probably, do you hold or trim right now? Because I think the sector is about to begin at least an interim or at least a medium-term correction here. So with that aside, let's get to the video. Okay, so the first thing that determines whether you should sell a position or not is you have to think about the sector trend. And so this is where we are right now. I talked about it in the Friday recap. So this is GDX, and this is the new 52-week highs in GDX. Now, this moving average here, this smoothing mechanism, is at 36.5%. So the last 20 days, the 20-day moving average of new highs is 36.5%. And that's right here. You barely can see the last day because this is a chart that goes back 20 years. So look how this compares to some of the other peaks. We know about 2016, 2020, but this was a secular bull market in precious metals, 2000 to 2011 or 01 to 2011. And we can see here how the spikes in new highs and the moving average, they correspond to interim or intermediate term peaks. So we can see right here, this spike, this peak here, this one in 2006, this peak here, although there was one little leg higher after that, and then there was a peak. Here's 2016, 2020, so we can also see it here. This is 2019, 2020. And so this is recently, and this is right where we are here and now. So whether you're in a sideways market or you're in a secular bull like here or now, when new highs blow out to the upside, you're going to get a medium term or intermediate term or interim peak, whatever you want to call it. So we are basically at that point right now. It might not become obvious in the next couple of days, but I think by the end of the month, it'll be clear. So the sector trend is telling us, okay, this is a time when you probably want to take some profits, trim some positions. So that's number one. Now, we're focusing on individual stocks. So this pertains to individual stocks. And look at the company's stock chart. Does it look like a rhino horn? You sell the rhino horns, and this is a rhino horn. This move like this, you can see. And so you want to be trimming aggressively or selling when the stock chart looks like this. Now, let me just stop for a second and go back. What does this look like? This looks like a rhino horn. So, and this is GDX. This is the entire sector. And by the way, you have to look at, depends on the chart, but you have to look at 2, 3, 4 years maybe to see the rhino horns. If you're only looking at 9 months or 6 months or 3 months or even a year or 18 months, you can't see the rhino horn. They're more visible when you're looking at 3, 4, 5 year type of charts. So again, these are two things. What's the sector trend and how's the company's stock chart look? Does it look like a rhino horn? Okay. So these are important. Now we're going to get into some other things here and now. And this is an obvious one. For someone like me, I have a diversified portfolio of junior mining companies. I like buying individual companies. Now, this differs for everyone, but what percent of your portfolio is in the stock? Now, for me, 10% or 15%, those are key thresholds. So when the stock goes above 10%, that's probably time to trim it. Now, if it's 15 or 16%, that doesn't mean you have to sell it back down to 8% or 9%. It just means if the stock has become such a big winner that it's over 10% of a diversified portfolio, then it's time to trim. Again, that doesn't mean you have to sell half or sell the whole thing. It just means cut it down. That's trimming. Now, we have to think about another aspect to these individual companies. Are we looking at explorers or developers or producers? Because all these companies are different. And you might know that I favor producers and developers. And one reason is their outcomes are more predictable. And so therefore we can assess what their potential value could be in the next year or two, but also right now. Whereas with exploration companies, that's more difficult. And for explorers and pre-discovery type of plays where they just start drilling and they don't have a discovery or a big resource yet, there's much greater risk. When you see these stocks pop and make huge moves, in most cases, they come back down. So that's where the sell half if you get a double, that's where that originates from. And I can tell you 2 times I had basically pre-discovery plays. They made huge moves higher, and I was thinking, oh, maybe these can keep going. They're going to be 20 baggers. They went all the way back down, and I didn't trim anything. So this is how you learn. You learn from your failures. So my larger point here as I babble on is you probably want to be a little bit more aggressive, relatively speaking, with trimming these versus these. Okay, so moving on, we got some more bullet points. What's the company's current fundamental value? This is really important. What's the value right now? Not in 1 or 2 years. That's a separate thing. And not the value at 5,000 gold or $100 silver. Because look, all these companies are going to look beautiful at much higher metals prices. We have to assess what's the fundamental value right now. And again, this is easier with producers and developers. And while we are doing that, let's look at how does the company's value compare to peers? And by peers, that can also mean the other stocks in your portfolio. You should evaluate the current value of all your positions, because that by itself is also going to help you figure out which ones you should be trimming or taking profits in, and perhaps which ones you should be adding to. So assessing relative to peers is so important. Now, the last thing, okay, we can assess the company's value and potential in 12 months. Now, I think 12 months because a medium term or intermediate term correction, maybe it's only going to last the downside for 2 months, 4 months, 3 months, something like that. Now, the market thinks generally about 2 quarters ahead. So the market is 6 to 9 months ahead. So that's why I say 12 months. 18 months is probably a little bit too long to wait, but 12 months, because after the correction for a quarter or two, the market will be discounting what's coming in this time period. Now, again, what's the company's value right now at current metals prices? Okay. Because again, generally speaking, you want to trim something that appears overvalued at current metals prices, and you want to hold the stuff that appears undervalued when also considering those other factors. And again, thinking about producers and developers, they get the greatest re-rating from building a mine, so the greatest valuation bump. So keep that in mind. But you also have to look at the value and think, has the market already given them the re-rating from building the mine? Because the stock can make a huge move before they even start pouring gold. So that's one thing to consider versus maybe they haven't got the re-rating yet for whatever reason. So keep that in mind. Now, with respect to exploration, again, this is more subjective with exploration companies. Did they just make a discovery? Are they growing a discovery? Did they already raise money in the last couple months? Or think about the other side of that. Do they need to raise money? Will they have to raise money in the next couple months? Okay? So keep those in mind for the explorers. And I think I mentioned this. So this is the same as what I said in the last slide, but we're thinking about in the next 12 months. So you can assess, how does company A look versus company B in 12 months? Does one company, are they going to be increasing production versus is company B not increasing production enough, et cetera, et cetera. So these are all the things we should look at that can inform us as to when we should be taking profits and also by how much. So with respect to trimming, we're still relatively early in this new cyclical bull market. So I don't think this is a time where you would have to be aggressive about taking profits. But again, everybody's different, but it's probably a time where you want to think about taking some profits and doing some trimming. And again, look at things on a case-by-case basis. Because let's just say the sector is going to correct 15 or 20% in the next 3 or 4 months. All your stocks are not going to do that. You might have some that are going to go down 30%. You might have some that are only going to go down 7%. You might have a couple that might move higher. So assess all these things company by company, and then you'll better understand, okay, well, this one, I should sell half of this one because it's really extended. Okay, this one, maybe I'll only sell 20% of. I don't need to trim this. I'll just hold this. So again, think about all these things, but also do it on a company by company basis. That's all for this edition of Macro Mondays. Hope this was helpful. Is there something I missed? Would love to hear from you. Leave a comment. Thank you so much for tuning in. Hope you had a great weekend and hope you have an even better week ahead. And I'll talk to you guys later in the next video.